Coming up on today's episode.
The first thing people do when they want debt consolidation is they need to apply for a personal loan, right? So they, first of all, they need to see if they can afford it and what's their interest rate. And you go on Google, most of the time you Google, personal loans kind of stuff, and it comes up with a whole bunch of lenders that are going to offer personal loans. Rates from 6%, right? When it says rates from, that's not the rate you're going to get.
17% later.
But what happens is customers will apply to Bank A, and Bank A will come back, congratulations, you're approved, but your rate's 14%.
Yeah.
Right? And you go, oh, that's too high. I'm going to try Bank B. Bank B comes back and they decline you for whatever reason. Then you go to Bank C and they come back and now they're 16%. And then you go, well, I want to go. And this isn't necessarily even applying. This is just going onto their website and saying, I want a quote.
Yeah.
And when you go direct to a bank and you inquire for a quote, that bank's going to hit your credit file.
Oh, 100%.
And every inquiry, and it also compounds. So the first inquiry may take off 40 points off your credit file. The next one might take 90 off. The next, 50. So, and then another 60. And it compounds and then it gets worse and worse and worse. What we sort of encourage is go through a broker, because the broker will have access to 10 personal loan lenders, and we can do quotes with every single lender without affecting your credit file.
Dodgy advice and bad decisions can cost you big in real estate. We're here to make sure that doesn't happen. Welcome to the No BS Real Estate Podcast. I'm your host, Jo Agresta, and it's time to take control of your property journey together. Welcome back, everyone, to the No BS Real Estate Podcast, your listening how-to guide to the Aussie finance and real estate market. I'm your host, Jo Agresta. Now, today's episode is for anyone who's ever wondered, can I use a personal loan as a home deposit? Is debt consolidation a scam? And what the hell is asset finance and why does it sound so dodgy? So today's episode, we're breaking it all down with someone who knows the industry inside and out. Donovan Roberts, founder of Better Broker Co., a finance expert with almost a decade in the game, helping clients secure finance and funding for everything except houses. This is a bit of a different episode, everyone, but it's important because a lot of you are business owners out there. So if we're looking at trucks, yes. Boats, yes. Rock crushers, yes. Also yes. And more importantly, he helps everyday Aussies use asset finance and debt consolidation to move towards home ownership without the BS. And that's exactly why he's here. So Donovan, welcome to the show.
Morning, welcome. Thank you for having me.
Of course, I've been looking forward to this. And a funny story for those who don't know, yesterday we had another guest pull out at the last minute and I called Donovan in a panic and I said, would you want to come on early? I know this is maybe less than 10 hours notice, but how do you feel? And you just jumped right in. You were like, 100%, I wanted to do this straight away last time.
Yeah, I've been super excited. I've been looking forward to this. I'm very excited to be here. So thank you.
Of course, amazing. No, I'm so glad you came on because this conversation's different to our typical flavour. So we're going to take, for our listeners, we're going to take this a step back. This is before you actually get on the home ownership journey pathway. Debt consolidation is a big thing to talk about. Asset finance as a vehicle to funding is also important. So we're going to take it back a step that if you're in the position of thinking about buying maybe in the next year to 2 years or even less, this is a really good episode for you to tune into because we're going to go through some of these things with Donovan on today's episode. So yeah, let's get into it.
Let's do it.
All right. So like all good places to start, let's go through your journey because, I want to understand and help our listeners understand, how did you get into the finance world and how did Better Broker Co. start?
Great question. When I finished school, I didn't necessarily know what I wanted to do. I was always good at math and I knew I was going to be in some sort of financial industry. I went and traveled for a little bit, still never found my passion and decided to do a degree in accounting. And then I realized accounting is really boring. No offense to any accountants out there. It just wasn't the industry for me. I wanted to be more people-facing, more sales kind of thing. I think that was my strength. And luckily through family who are also in the finances, working as a business manager, I slowly got into the idea of becoming a finance broker. It was more of a job at the beginning to pay the bills, and as I did it more and more and more, I fell in love with it. And that's been now the last 9.5 years. So been doing that for a while, absolutely loving it. And about 12 months ago, myself and two other partners decided to, we all worked together for a number of years at our previous employer. And we decided, you know what, we can do this better, basically. We've taken the standardized finance brokerage, what they do and what their values are, and thought this isn't what our values are. And we wanted to bring our values into our own business. And that's essentially where we, created Better Broker Co, because we wanted to be better. Not just, not thinking we're better in regards to as, better people or, better, not even better service, even though that's what we did, but better values, better, better customer outcomes, that kind of stuff. So that was the idea behind the business.
And your branding actually really stood out to me. I really love that name, Better Broker Co, because automatically it kind of builds that trust of like, oh, why are you better brokers? And that's why I kind of like to ask my next question is, what's the reason behind the Better Broker Co? But why did you name it in such a way?
Purely just from working at multiple different brokerages and even, dealerships over the last few years, three of us got together and said, we can do this better. And that's kind of where the name came from. Yeah.
Love it. You know what? I like that your tagline is so on brand, by the way, with this podcast title, right? Yeah. So your tagline is finance without the BS. I love that. Talk me through that.
Yeah, so I guess the hardest part of starting a business is coming up with your branding and all that kind of stuff. And I think that was where my first thought went is, we're going to be different. There's too many professionals out there, not again to say that that's the wrong avenue, but that didn't fit who we were. We wanted to be very upfront and honest and work in the customer's best interest. There's so many, I don't want to say dodgy brokers out there, but there's so many people out there that don't have the customer's best interest at heart or don't have, the transparency that they should legally and ethically.
Yeah.
So it was just, again, one of those open conversations about what are we going to do? And I said, well, I just want to cut out all the BS basically and just be straightforward. If the customer wants, to proceed, they're going to proceed without us having to try and hide anything.
Yeah.
Buying a car is this generally second biggest commitment somebody will make in their life financially, besides buying a home. Trying to hide fees, charges, interest rates, that kind of stuff is just immoral. So we came up, with the tagline, finance without the BS. We plastered it over everything. After a fair while, we decided that maybe we drop that off the tagline on the website. So, but still with the same mentality of, we're just going to cut it out and get straight to the, to the details that people want to know.
And I love that because that's so on brand for why we have this podcast and why our listeners tune in, because we like to deliver the no BS. And I think when you're dealing in finance, because it's so sensitive, right? Like we spend our lives either saving or, we want to access certain things. And as much as we say money isn't important, but money can give you options. And having a business that you can deal with and an individual like yourself that has that motto and that, internal radar that says, oh, I'm not going to give you the bullshit behind it. So I'm just going to be straight up. If you can't do this, we can do this, and work with people within their limits.
Yeah, 100%. And I think it's, we just spoke about earlier before we actually went live about patience. And I said, I'm not a very patient person, but I think when it comes to people's, objectives, it's actually finding out what they need, not necessarily what they want. And if it's a process of actually, the best deal today, is not the best deal overall, like we can work through stuff over the next period of time and get you into a better position. That is my primary goal. It's not about turning a quick dollar. It's about, creating repeat business through happy customers. Basically, we're not here for, and that's our also, that's our slogan is, we're not here for the one loan, we're here for the many. Creating repeat business, you're not going to do that by being dodgy.
Definitely not. And what I like is that there's a personal story behind this, because you and your wife had your own home buying struggles when you went through it. How did that shape how you now help your clients?
Yeah, it's an interesting one. So I was sort of new into the finance game when my wife and I bought our first property, and you think you know a lot about finance and you don't. And when we had taken out 2 car loans and we had credit cards and stuff, and when we went to the bank to say, we want a home loan, when we had all, we had our savings and everything that we had built up, and it was the broker at the time that said, well, we can't give you the amount that you're after, but what you can do is pay out your current debts and use some of your house deposit to buy, and then work through the scenarios with us of paying out our liabilities. We're able to give us a larger lend, and maybe delayed, buying journey by a little bit because we had to resave some money. Having a lot of debt won't necessarily impact your ability to be approved for a mortgage, but what it can do is impact the capacity that you want. Now, if you're only looking at a smaller borrower, then it may not matter. If you're wanting to go for your dream house, it may matter.
Yeah, it's going to make an impact.
Yeah, 100%. So minimizing liabilities, for when you're going for a mortgage, or consolidating unnecessary debt into one, reducing that monthly repayment is important. Yeah.
And I like that you've got that personal experience because, I was very similar to you with my journey. I had a car debt at the time and, other liabilities. Afterpay was my issue. I had to pay that out. That was considered a liability.
I think I've got some stuff to tell you about Afterpay. I'll keep that for a little bit later.
I cannot wait to get into that because I think that's something that people in our age group definitely, we jump on every bit of tech or new app thing. And then we end up in stupid situations. So it's so important. We're going to definitely unpack it because we need to. And this is like the perfect time to kind of lead into the myth busting part of our episode. All right, let's talk real finance. And I like to do this for a number of reasons. So we have some of our listeners that submit questions to us or submit scenarios. And then we go on Reddit and we go on the Facebook groups to have a look at what are the real buyers and real struggles that these people are going through. And because we've got a professional in the room, who better to ask and do myth busting with me than you? So we pulled these real comments from Reddit, Facebook, and some of our listeners, and we want to get your take. So let's get into it. Now, each of these questions gives, you a chance to explain the truth and talk about how it's going to help solve, the exact issue and what Better Broker Co does.
Yep.
So this is one on Reddit said, can I use a personal loan for a house deposit? Can you explain how that actually works and when it makes sense?
Yeah, great question. The answer to that will have there'll be differing opinions depending on who's answering it. If you're asking the bank, can I use a personal loan to put it as a home deposit? I probably wouldn't ask the bank.
Yeah.
However, if you're applying for a personal loan through a broker or through a bank, one of the questions as to why you're lending the money can be a home deposit. Banks will lend you money for the purpose of a home deposit. Now, when you're actually applying through a lender for the mortgage, they're probably not going to be too excited about the fact that you're lending money for the home deposit, which is where I guess you've got to be careful. So yes, you come to me and say, I need $40,000 for a home deposit. Great, we can set up that loan. We can tell the bank you're borrowing 40 grand for a home deposit. What you'll probably need to do is have that money sitting in your account for at least 3 months, or put it into a savings account, potentially separate to a liability account, so that when in 3 months' time you actually apply for that home loan, you've got that genuine savings there. You've got that savings.
Wow.
If they see, hey, I applied for a $40,000 loan last week and now I'm applying for a home loan with a $40,000 deposit, it doesn't show genuine savings. You definitely can borrow money for a home deposit, but you've just got to be patient with it, is all I'm going to say.
Gotcha. That's such an interesting option because when I talk to a lot of buyers, they think, I've spent 2 years saving this deposit, 5 years saving this deposit. I think this would make a big difference to know that option even exists, especially when we talk about the current economical situation where everyone says, you're never going to be able to buy a home,
Correct. And this goes back to, I guess, what I spoke about before was if you can afford the property, if you're not going for your dream house, $1.2 million property, you going for something, that
start a home
that's well within your budget. And I think everyone should buy a house within their budget.
Yeah.
Don't go just because you can borrow $1 million doesn't necessarily mean you should.
No, it's a trap.
Especially when you borrow at 3% and now rates are at 7%. It's put people in some difficult situations. But if you've got the capacity there and you've got the ability to afford a home loan and a personal loan, there's nothing stopping you from borrowing that 10% deposit, the remaining 10% deposit, and putting it down onto a property. If you can afford both loans comfortably, and that's obviously the key is, can you afford them comfortably? You're not stretching yourself. And save yourself the LMI or, whatever other fees and stuff come involved, or being able to put down that, first home deposit. Nothing stopping you from doing that.
And this kind of feeds into what Better Broker Co, as in even brokers in general, right? They're going to be able to give you your affordability or your feasibility of servicing that loan. It's like before you borrow, just get the realistic picture of, what are your financial instruments. So no, that was well answered.
Yeah. And there's nothing to say that you can't ever, refinance at a later date and incorporate that money back into your home loan and pay out that personal loan. I think being smart with how you borrow is important. So again, you can obviously borrow money for lots of things, and how you use that money is up to you. But if you're smart about it, there's some really good ways to be able to leverage the bank's money and, be able to invest it in a property and be able to grow and pay it back over time. And, you don't have to pay that loan out over 5 or 7 years. You can pay it out a lot quicker. So, just being smart and even having a chat to a financial analyst, and, it's always handy.
No, I love that answer. So that's a good one. And I like this. We get this a lot. So this has come in from one of our listeners. Debt consolidation ruins your credit score. That statement alone, what really happens? What should people know before doing it? So when you go down this path.
Great question. The first thing people do when they want debt consolidation is they need to apply for a personal loan, right? So first of all, they need to see if they can afford it and what's their interest rate. And you go on Google, most of the time you Google, personal loans kind of stuff, and it comes up with a whole bunch of lenders that are going to offer personal loans. Rates from 6%, right? When it says rates from, that's not the rate you're going to get.
17% later.
But what happens is customers will apply to Bank A, and Bank A will come back, congratulations, you're approved, but your rate 14%.
Yeah.
Right? And you go, oh, that's too high. I'm going to try Bank B. Bank B comes back and they decline you for whatever reason. Then you go to Bank C and they come back and now they're 16%. And then you go, well, I want to go. And this isn't necessarily even applying. This is just going onto their website and saying, I want a quote.
Yeah.
And when you go direct to a bank and you inquire for a quote, that bank's going to hit your credit file.
Oh, 100%.
And every inquiry, and it also compounds. The first inquiry may take off 40 points off your credit file. The next one might take 90 off. The next, 50. So, and then another 60, and it compounds, and then it gets worse and worse and worse. So applying for a personal loan or for debt consolidation can affect your credit file if you're making multiple inquiries. That's the key.
Right.
With that. Debt consolidation is a great way to consolidate your debt, save you money on a monthly basis, and it can ultimately improve your credit file if you pay out some bad debts, credit cards and stuff. What we sort of encourage is go through a broker, because the broker will have access to 10 personal loan lenders, and we can do quotes with every single lender without affecting your credit file. So I can go and get quotes from all 10, and I can give you every single lender, what their fees are, what their interest rates are, what their repayments are, without a single inquiry in your credit file. We also do eligibility with each lender, like a pre-qualification. So we can say, you've got to be approved with these guys. This is their rate, fees and everything, without affecting your file. The other thing to note with debt consolidation, which I think we also may get into, is can debt consolidation actually save you money?
Yeah, interesting one.
I've done a lot of debt consolidation. I think about 80% of all personal loans in Australia is for debt consolidation.
Wow.
Now, if you look at, you have 2 car loans, a credit card and a personal loan, you want to consolidate it all together, or say 1 car loan. What you're generally doing is consolidating it all into one big loan.
Of course.
Now, that loan you generally extend over another period of time. So you may have 3 years left on your personal loan and 4 years left on your car loan, and, a certain amount of, term or money left owing on your credit card. And you're going to take that whole thing and extend it over 7 years. You might save, your liabilities might be going from $1,600 a month to $1,000 a month, saving you $600 a month, which is really exciting. However, if you pay that loan out over the next 7 years, you may end up paying $10,000 more in interest over the time of the loan.
Makes sense. Yeah.
So that side of it doesn't necessarily affect your credit file, which was the question. It's more around the multiple inquiries. So
I actually didn't know that was the way it was pinged, right? Because I think there's another one that actually talks about this. I think you answered that really well. And for our listeners, good warning for you. If you're calling around banks and submitting multiple applications, just be very wary. And part of the reason why you do talk to a broker is you're going to get that guidance, and you're not going to pay an arm and a leg to get the guidance.
Yeah, I understand. Yes, brokers charge fees, right?
Yeah.
Nothing in this world is for free, unfortunately. We do charge a fee for our service because we have the ability to do this. Not only can we save your credit file an impact, we can potentially, now you might go to Bank A and Bank A might give you 9%, and you think, wow, I'm really happy with that.
Yeah.
However, you come through a broker, we might be able to go to a different lender and get you 6%. Right. So there is always potentially a better option out there.
Yeah.
We do charge a fee for that service.
Is important. You need to have that. I always have this methodology, right? It's so you tell me you're going to do all these things for me, but it's free, right? Sounds great. The problem I always have with that is whenever I've accepted something as a free service, they've got no obligation to uphold anything to what I need them to do, because I'm not paying for them for their time. It's a freebie for me. And all of a sudden, all these things that I wanted as a priority and I wanted the urgency on, I don't get an urgency on at all, because I'm not, in comparison to their paying customers, they need to go and help those people first. It's like they're paying for a service. So for those of you who think this is going to be some long dragged out service, especially debt's a sensitive subject. You're like, why would I pay for this when I already have debt? I'm already in the weeds. This is the one thing that possibly could save you. It's like small investment for long-term gain, doing it the right way with someone who you can trust.
Yeah, and I think having that advice of whether it's good debt or bad debt.
Yeah.
And I mean, this can go into the unsecured business side as well. So instead of a personal loan, businesses taking out debt. It depends what you're going to use the debt for.
100%.
If you're going to take out a $40,000 personal loan and just go on a big holiday and blow it on, some
Cars.
luxury stuff,
Yeah.
whatever it is, you're generally that's a cost to you. But if you're going to take out $40,000 to potentially consolidate debt and save interest, good debt. You're going to put it in a home, good debt. You're going to borrow money at 6% and put it into the S&P or the some sort of stocks that's gaining 10% per year, good debt. Again, I'm not here to tell you what you should and shouldn't borrow for, but there's a lot of flexibility when it comes to personal loans, and people generally think taking out debt is bad. Depends on what it's for.
Yeah, they'll like that. And that's a very clear message. Yeah. And this one here is interesting. So it says, this is someone from Reddit who said, I was told I'm too old to borrow at 43 years old. How do lenders look at age, and what can older borrowers do?
Another great question. And I love this one because I get it a lot as well. Like, people think they're too old. Probably 5 years ago, there was a limit. 43 is probably not that old. I mean, 10 years ago, I used to think 43 was old. And the closer I'm getting to 43.
No, that's young. That's like super young.
Wow.
Excuse me.
So that's really young. But I've had, 60-year-olds that I've still got 5 years of work in me, want to borrow, money. And previously, the World Bank said, no, we don't borrow, to over 60s. People started sort of to question that because there's, non-discrimination laws here in Australia, right? You can't discriminate on someone's gender, and all the other things that go with it. But now age discrimination is massive. You can't discriminate on someone's age. You can't not hire somebody for a job because they're too old, right?
Yeah.
Banks have taken that on board now, and they're not going to lend. They won't not lend to someone due to their age. You can be 80 years old if you've got the money and you can repay the debt. Banks cannot say no to you because you're 80 years old.
Yep. So it's more about the servicing of that debt.
Yeah, correct. So, and you could be, if you're 25 years old and you're not working, the bank's not going to lend you money. If you're 40 years old and not working, the bank's not going to lend you money. On the flip side is, if you've got a stable job or you've got stable income, for instance, I've just done one of Veteran Affairs, a returned soldier that, so he's not working, but he's on, the Department of Veteran Affairs, DVA, he can get a loan. The main thing that we do, the first thing that we do when we apply for a loan is, can you afford it?
Yeah.
Everything else is subsequent to that. So if you can afford a loan and you can pay it for the life of the loan, self-funded retirees, they've got enough money in their super, or they're generating enough from investments, we can do it.
It's like, yep, go for it.
Yeah, 100%. So there's no age limit. So I think the myth of I'm too old to borrow is silly. I think if you've got a stable income and you can afford the loan, on paper, not just tell the bank, I can afford it, I promise.
Trust me, I can do it. Don't stress. Don't even look at that way. Just I got you. Handshake.
Yeah, correct. I think the other interesting thing is, if you're a commercial customer, you're a director of a company, right? You're the sole director of a company. You've got your company. You've got maybe one employee, or, a smaller company. Yeah. You're reaching 65 and now you want to borrow $100,000 in the company. The bank's going to ask questions about a succession plan, because hypothetically, if you stop working, the business stops operating. So larger companies that have, other second directors or shareholders or multiple employees, that company is going to continue post the director retiring. But single operators that are reaching a certain age of retirement, you can't discriminate, but they need to have a succession plan. So they need to say to the director, who's going to take after the company when you retire, and make sure that company is still going to trade post-retirement age. But however, I've had directors of companies working until they're 75, 76, 77, So you just got to sort of jump those hurdles, but there's no discrimination on age.
No, I love that. And I'm sorry to that listener or you're not listener, but this Reddit person who was told they were too old to borrow at 43. I think you're really young, and I think that's super unfair.
Yeah, I used to think you were old, but now...
Yeah, it's like, if you asked me 20 years ago...
Your broker must have been 19 years old.
Yeah, 100%. I think there's an issue there. This next one says, brokers just want you to sign the biggest loan for more commission. How do you build trust with clients, like especially ones that have been burned by the system in the past, and maybe they have come across, like I know there's all bad apples in the industry, right? You get good and bad, and when you've had one of the bad, it's very hard to come back from that jaded experience. So what's your take on, what this person's saying, brokers just want to sign the biggest loan for more comms?
Unfortunately, that is reality in the industry. There are some really dodgy brokers out there that don't care about, you or your best interest. They're in it for the money. And I think finding the right broker is important.
Yeah.
And I think the easiest way to do that is don't just go through necessarily the first option. If you're at a dealership and that dealership says use our business manager, even if they're a business manager in a dealership, they have the same, they're in the same position of where they can charge you excessive amounts as any broker in the market would. So don't necessarily just trust a business manager. However, business managers are generally, they look after their customers, so I'm not saying that. However, there are brokers out there, as I said, that will take advantage of you, and it's not fair. So that's again where we're trying to change.
Differentiate.
Yeah. The way that we do that is, again, this is all just, it's all well me saying it without having to actually, without actually being able to prove it. But what we do is we spend a fair amount of time on the first conversation, not just saying, what car do you want? We ask the customer, okay, great, what car do you want? We do the application as you generally do, and we find out what the customer's objective is. So how long do you plan on keeping the car is a main one. Brokers don't ask this. It is a major point as to what is your outcome with this vehicle. Is this a short-term car you're going to keep for 3 years? Is it something you're going to keep for 7 years? Then you can sort of stage, okay, well, how do you want your loan structured? Because the longer the loan term, the more interest and stuff you pay. Do you want to put in a deposit, all that kind of stuff? And there's different ways that we sort of find out what the customer's objectives are. Once we know what that is, we can then provide quotes to the customer based on 3 different lenders. And the reason we do this is because there's brokers that will take an application and gather documents and then, go off, come back to you and say, congratulations, you're approved. And the customer goes, fantastic. What's my rate? What's my repayment? They don't even know. They've just been approved. And I've seen it so many times. The broker says, it's all in your loan contracts. I'll send it to you. And they run by the opinion that if the customer signs the loan contracts, they're happy.
That sucks. That really sucks.
They hide it because at that stage, then their customer's excited. They've got to prove, they've spoken to the dealer. They're going to pick up their car on Friday, and then all of a sudden they see their loan contract and it's 15% with a $2,000 fee in there, right? And then and then they don't want to go through the process again, right?
Yeah.
They're unhappy, but they sign the contract and they move on.
It's like they kind of just accept their fate.
Yeah. What we do is we provide 3 different options, 3 different lenders. So interest rates, what our fee is, what the lender fee is, what the exit fee is, what other features that the lender has, and 3 options.
Yeah.
The reason we do that is because it's not just a trust us, this is the best option for you. This is what's in the market. Now, one might be clearly better than the other 2, but we provide it to show this is what's in there.
You've done your homework.
Yeah, we've done our homework. We've looked around, and you don't have to, because if I just came to you, even with the quote up the first and said, hey, you're going to lender A and it's going to be 9%, right? Your first instinct is as a consumer, as a customer is, I want to get a second opinion, right?
Correct.
And there's nothing wrong with that. And that's why we encourage going around and shopping. Shopping is dangerous because you go and apply through lenders directly and it's going to hit your credit file and it's going to affect your credit. Shopping through another broker, that's a risky game as well, because again, you're just playing 2 people off each other that, ends up being, it can get quite complicated, right?
Yeah, totally get
Going through a broker that's going to do the research for you and going to find you what the best lender is for your circumstances, not the best lender that they're going to make the most amount of money on.
Yeah.
So that's it. That's the difference as well. Like one lender might be cheaper than the other, but one lender might be just a bit more hard work. They'll go with the cheaper option where they make more money. Providing 3 different quotes, a customer gets to pick.
Yeah,
and
for sure.
Customer gets to pick which option is best for them. And you'd be surprised, it's not generally the cheapest interest rate.
No, I believe that.
Yeah. People
Sometimes
go with
terms.
Slightly higher rates for better terms, larger balloons, exit fees, lower monthly fees, that kind of stuff. So I think assuming what a customer wants is, disadvantageous to them as well.
Of course.
And in my opinion, if a customer doesn't want to proceed, you've provided them quotes and you've shown them what their interest rate and fees are, they're not going to want to proceed when they get the loan contract.
It's so true. And, one thing that I want to point out is, I've interviewed a lot of professionals on the podcast, of course, like different walks of life. And even though you said, I can't really prove, I can tell you like that I am honest and this is what we do and this is our ethos. But what I've noticed just from interviewing all these professionals, there's a clear standout, right? There's this passion that you speak with. There's this honesty and an approach of comparison, openness and transparency that's really consistent amongst all our guests. Because I've watched I've also just so everyone knows, I don't take every professional that comes on, into the fold, because there's a reason, there's a research piece behind what we go through as, the interviewer and as the host of the show. I don't want to be interviewing the wrong people and sending someone your way that you end up going, hey, Joe, that was crap. What were you thinking? So there's a lot of research on our side, and what stands out, like I said, I've dealt with professionals in this space who do not personalize it. And every single professional talks about this customization and this planning and goal setting from the initial consultation. Doesn't matter what it is, whether they're brokers, buyers agents, real estate agents. That's been a common theme on this show is, this is the first step in our journey. Who are you? What do you want to do? Why are you doing this? Love it. So even though you said you can't prove it, I feel like that's my little bit of proof. We interview the right people on the show, and this is exactly the common theme that we see. So of course I had to give credit where it's due, right? Now we're going to bust this one open because we referred to it earlier. Mm-hmm. Someone on Reddit said, Afterpay ruined my credit. I didn't know it could. This is so interesting. What other silent issues are stopping people, I guess, from getting approved, like an Afterpay, a Zip Pay kind of setup?
I'd go back to the times before buy now, pay laters, before the Afterpay, the Zip Pay and everything.
Lay-by.
And you had lay-by. But the thing with lay-by, like I've used lay-by, it's great.
Yeah.
You don't get
the
item until it's paid for. There's no gratification. Like if you can't pay for an item up front, you don't get it. I mean, I bought my kids' car seats on lay-by. You know what? My wife was pregnant. We knew we had 9 months to get a car seat. We figured, well, we'll go and start lay-buying it, 6 months prior and pay it off over time. But we don't need it for 6 months. We had lay-by, and then you had the standard credit cards, which credit cards are, credit facilities, and they have credit licenses. Along came Afterpay and buy now, pay laters, which never had any government regulation. They didn't have to hold a credit license. And the risk with that is you apply, and I've never got one, but my wife has it and uses it all the time.
We love it. I imagine shopping is the key indicator.
And you can apply for an Afterpay account. And as far as I'm aware, there are practically no checks on the customer's financial situation.
No, none. Like literally it's, do you want Afterpay? Yes, sign up. And then what is the limit? I think they do one check of maybe your age, like with your license, and then it's bang, here's your 1,000, 2,000, 5,000 limit.
Yeah, and we see it. So, when it started to come, we didn't really have to declare it in finance applications as a liability because it was so brand new. Then lenders started sort of saying, oh, well, you need to declare it. And then we started having to ask questions. Do you have buy now, pay later? And then the amount of people that were like, yes, I have. I'm paying $600 a month on, Afterpay and buy now, pay later is ridiculous. And then finding people getting into financial hardship by using these the instant gratitude of like, I can't afford this, but I'll pay it off later. And no, I can't afford this, but I'll pay it off later. And I want to go to Bali, but I can't afford the flights, I'll pay it off later. And, yes, it's the one-off transaction's okay. But when you start having $2,000 that you got to pay it off in 4 weeks, 4 fortnights, whatever it is, it starts to add up. And then what happens as you start paying it off, you start dipping down into it again. And the scary thing is, as I said, there wasn't any checks or regulations around the customer's financial situation. As of June 10th this year, so 16 days ago, all buy now, pay laters are required to have an Australian credit license. So they've changed. So now they become a financial institution. They need a credit license and they have to start doing
the checks.
Come expenses, liabilities. If you can't afford an additional liability, you cannot get a buy now, pay later.
See, this is what I like, right? Because I saw that announcement come through and I love this for so many reasons, because initially I'm like, this is a vehicle for people who can't afford shit to put it on Afterpay, get themselves into a mass amount of debt, get into trouble with their credit, and then get themselves into a hole. And this business is continuously supporting that journey and that pathway. Whereas now those same people who, it sucks. It's like, it's a good and bad thing, right? Like someone who can't afford to get a loan or get themselves out of that situation, Afterpay is a great solution. But then if you're someone who just constantly takes on debts and debts and debts, it's going to hinder you in the long run.
100%. And I'm not saying the buy now, pay later is fantastic. I wish I invented it, right? It's amazing. Interest-free loans, you pay a small monthly fee, and then you get the larger ones, the hum and stuff, where you can go and buy furniture. The Latitude. Yeah. Latitude Go Master, you go to Harvey Norman, you could buy furniture interest-free, whatever it is. But my issue with buy now, pay later was there was no regulatory checks.
That's right.
So keep using buy now. I'm not telling you to use it, but what I'm glad now is that younger people growing up, turning 18 and 19, are not just relying on, they might not even have a job, getting buy now, pay later. So it is a great business and it's a great use of, being able to pay stuff off interest free. And I'm always a big advocate for using the bank's money rather than your own money. However, yeah, now that they've introduced checks and capacity and assessments and stuff, the people that can afford it are going to be approved, and the people that can't are not. And that's what we needed. We need a regulation in the buy now, pay later industry.
No, I love it. That's a really good one to talk about. And now a couple of others. This one here. So funny. Debt consolidation is a scam. This came from a Facebook group. What should someone look for in a legit service, right? And I think we've already touched on this, but how do you do it differently? I think it's more around that topic of getting a broker to shop around, not just doing it yourself and then getting a bad credit while you're shopping.
Yeah, 100%. So debt consolidation is basically, it's a fancy way of saying, I'm going to get a personal loan for paying off all my other debt. Consolidating all your other debt into. So the main thing is you've got to get a personal loan. You've got to be approved. So you've got to get the best deal, the best rate, the best fees and stuff. So that's the first thing, is talk to a broker, find out what's the best personal loan option, and you apply for a personal loan. The next thing you got to look at is, all right, and we've actually got a really cool calculator on our website if you want to look. So you can go in and add in all your debts, your credit cards, your car loans, your personal loans, your buy now, pay later, even your cash, your payday loans, your cash converters, Fairgo Finance, which is a whole nother topic of, irresponsible lending.
Bring you back to the show for that episode.
So you can put in all your debts, how long you've got left on them, how much your repayments are, and all that kind of stuff. And then we calculate. So let's just say, as I said before, you need $60,000 to consolidate all your debt. But you're going to take your monthly repayment from $1,600 per month to $1,000 per month. And I'm saying this as a real example of somebody I've just done. And that's exactly what we did. $1,600 a month in repayments. And that's only including a minimum monthly repayment on his credit card, which would have taken him 72 years to pay off. So probably slightly higher than $1,600 a month if, he won't actually pay off his credit card in less than 72 years. And we could consolidate all of that into one monthly repayment of $1,000, so saving him $600 a month, and then there's only one liability he has to worry about.
Yeah, not these multiple issues with multiple payment default problems and things like that.
Peace of mind, one monthly payment coming out, giving him more cash flow every month. However, you have to make it very clear to the customer that if you take this loan, because we set up over a 7-year loan term to reduce that monthly repayment, you only make minimum repayments over 84 months or 7 years. You could do the math, $1,000 a month, 84 months, that's $84,000 the customer's paying back.
Yeah.
Right? So that's $24,000 in interest compared to probably the $7,000 or $8,000 in interest he would have paid if he had his other loans paid out in time. It can cost you more money. However, it's a short-term gain and it's convenience. So it's, hey, now I only have one big repayment, can pay it off monthly, as we go. I'm saving $600 a month. I've closed off all the other debt, which may be, bad debt, like maxed out credit cards, at 20%. So now we're setting up something, smaller. I think you just got to be aware. Now, there are cases where you actually will save money by consolidating debt, especially if you're consolidating high interest debt, like your, payday loans and higher other personal loans. You've bought a house in the last few years, so you get a lower rate. So you can save money. But I think if you're going to do a debt consolidation, do the numbers yourself. Understand that it's probably going to cost you more over the life of the loan, and don't necessarily take everyone's word for, hey, just consolidate this debt, you'll be better off.
Yeah,
it will be on a monthly basis. And you can always pay it off sooner. You can pay it off early and save that interest. There's no extra fees on personal loans, which is really good. But the other thing for home lending, it's really good if you've got some credit cards and some car loans and stuff, and you can't pay out the debt because you don't have savings. You can consolidate it to increase your capacity.
Interesting.
That kind of stuff. So if you're struggling with capacity, and even $300 extra a month can get you a fair way forward in a mortgage, and consolidating that into one
debt.
Yeah, it can be beneficial for property.
I love that. And thank you so much for busting some myths with me, because I love this segment. I think it just gets us to open up like real conversations and real buyer concerns or, people concerns. So what I love about this is that you're not just approving loans, but you're giving people options and really like walking them through the logic behind it and the decision making. And that's what makes your approach different and comes out very clear. Of course, and I want to move into, we're coming to the end of our time, but I can't go without knowing what's in store for the future with you guys, because you've mentioned building a community, which is super important. What's next for Better Broker Co?
Yeah, so one of our key pillars for our business is education. So that's educating customers as we go. So again, it's not just setting up a loan. It's we walk them through the process, tell them why, this is the lender, this is why your situation is how it is and how it works. So educating borrowers so they become better borrowers. It's not just we're telling them. And that then goes into the industry that I want to sort of attack. The asset finance industry has a really bad name. Previously, real estate agents have had some pretty, It's been a tough industry, but I think that is sort of turning around to be more regulated and getting a better name. Where asset finance brokers, if people cringe when they hear, I'm an asset finance broker. So my goal is, I think I'll be, happy if we can sort of put a better spin on the industry, and we can do that by educating other brokers, new brokers, and, even experienced brokers as to, what customers want and how to better serve them. And I want to do that I've actually started doing that through a community for asset finance brokers that's gonna involve education pieces, build a community of workshopping, and mortgage brokers have this already. They've got really great communities, and they're very supportive of each other. Where I feel like asset finance brokers, the ones that don't do mortgages, tend to compete heavily.
Yeah, but there's a big culture of that.
Yeah, and I want to change that. And I think by changing that and us coming together and, talking and sharing ideas and sharing what works and what doesn't, we're going to push each other to be better, to learn and put our customers first.
100%. Like, it's the same with any industry professional that has community behind them. Buyers advocates tend to stick together, right? We have a very big community. Like, that's my trade. We support each other. Like, if I can't because we're all very niched out, we'll often say, yeah, that's cool, I can help you with this. But who would be better to actually help you getting a McMansion? Not me. I do the mum and dad homes. So I'm going to refer you to someone like Lisa Brickcliffe from Oriam & Co. She's high-end market, does a great job. Her and her husband, like Damien, they kill it. So we refer to each other, whereas if I looked back years ago, I don't think we would have ever done that. It just goes to show, I think that's a beautiful thing. Like, if you can build a community around that and start something for asset finance brokers like yourself, then you're going to find a lot more consistency through the business too, with experience, because when you surround yourself with the right people or the right methodology, it all rubs off.
And I think, holding each other accountable is very important. It's going to be a long process, but it's one I want to start. That's what's in the future for me. I mean, Better Broker Co. is my passion, and we're going to continue to build that. But through that and through my connections to that is building this open community for other brokers and being able to obviously make it a better, reputable industry.
I love this. And Donovan, thank you so much for coming on the show. This has been so insightful. Donovan, again, thank you for joining us. You've given our listeners, real tools to rethink about how they view debt, deposits, but also finance. So just to summarize, guys, what we've learned today, you can use asset finance and debt consolidation as smart stepping stones if you know how, with the right team behind you. Better Broker Co. Come on. Bad credit isn't a death sentence, but it needs strategy. And most importantly, a great broker doesn't just get you approved, they make sure you understand every step. Someone like Donovan. So thank you again.
Thanks for having me. Thanks.
Of course. Now, if you're keen to speak with Donovan or you want to explore your options with Better Broker Co., his details are in the episode description. Make sure to check them out. Thanks for tuning into the No BS Real Estate Podcast, and don't forget to follow, rate and share this episode with anyone who needs it. We'll see you next time. That's a wrap for this episode of the No BS Real Estate Podcast, powered by Abodey AI. If you found this conversation helpful, don't forget to subscribe, leave a review, and share this episode with someone who might need it. If you're looking for more guidance on your home buying journey, you can visit www.abodey.com.au for expert advice, property insights, and the tools you need to find the right home with confidence. If you're already on your journey, you can also download our app. Just search Abodey AI on the App Store or Google Play. Have any questions or want to connect, you can follow us on Instagram at abodey.com.au or send us a message. We'd love to hear from you. Thanks for tuning in, and we'll catch you in the next episode.